All right. So as we were talking about earlier, right? The first thing that you want to do before you do anything is set you up a TradeAvate account. Once you set up a TradeAvate account, it's gonna look like this once you get in, and you could do the free version. I wouldn't advise you to pay for anything right now because you know what I'm saying, until you like actually start trading with your live account. Let me go ahead and do that. So you're gonna click on super charts, and that's how your chart it's gonna come up. Now the link that I sent you this link over here to my right. So once you open it on the computer, this link is gonna come up. You could just add it to your Trade and it's already gonna look like this. So these are all my futures. These are the regular indices, crypto, commodities, and tech stocks, currencies. So now with the way how we do the markup, unless you have your Tradingview account or whatever broker that you're using, which I'm gonna go down here. So these are all the brokers that you could actually link with Tradingview. I mean Tradingview. My bad. I keep saying Tradingview. So this is the one I have, which is Tradingview. You also have this one, but they require you to do like an interview with them and stuff like that. These I don't like them. They're trash. Not saying that they're trash because they're the same company that make this, but I don't. For some reason, I don't like them because I don't like the way how they do their margins. Over here, you have a paper trader account. So you go ahead, you can open a paper trader account so you can practice on your paper trading. Just practice to get to get the little experience with the chart. You also have Webull that you could link with um with Tradeovate. I mean with TradingView, and you got Webull Pay. You got both of them. So basically, once you link it, you would do all your trades over here on TradingView instead of doing it on the Webull account. So this Ninja Trader basically controls Tradeovate and these two right here. There's another one that it control, but these three. Well, like I said, let's focus on this right here, which is your paper trade account. Um, if you think that you're gonna, if you think that you're gonna deposit $2,000 or whatever money that you're gonna deposit, start the account with that on the paper trade account. It's just a stimulated account, and you just go from there to to practice how you trade and stuff like that. See different angles, how you put your trade in. So my chart normally look like this. Sometimes, like I said, sometimes I have the indicators, but I don't, necessarily put in the indicators and stuff like that. So when I start looking at the chart, I will look at the week. So take this off. So looking at the week, right? If you notice that, so my candles are a little different. So the blue one mean that the market is going down, and the orange one mean that the market is going up. You could go ahead and change it right here if you want to. So I have these ones is going up. I have them orange, and these ones going down. I have them I have them blue. And you have to make sure that the time frame that you have is going to be set on New York, which is UTC 5 New York at all times. Doesn't matter what part of the world you at. Just make sure that it's set on that. Another thing, so for me, when I'm looking for markups, I have different ways that I look for markup, but I normally pay attention to this candle right here based off. So right now I'm on the weekly, right? So the weekly is telling me that the market is in a downtrend. So I just let it be like that. When I go to the daily, also see if the daily is showing me that the market is in a downtrend, right? I'll go down to the 4 hour. 4 hour, I love the 4 hour because the 4 hour teaches you a lot. So the bigger time frame showing you that the market's in a downtrend, but the 4 hour is telling you that the market is trying to pull back. So now, if I see something like this, I would do something like this. And I would, so basically what happened is the market just basically came back into this area structure where, market respect before, and I'll wait for it to go back up, at least come up to this area right here. And then I will put a sell on the way down. But because you're on the 4 hour, you have to wait for the next 4 hours or 3 hours, whichever. If you look over here to the side, if you look right here, you see that the market is telling you, what the time frame that you're on and how much you got left. So each one of these candles represent the time frame that you're on. So if you're on the weekly, like this is 1 week, 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 1 week. If you're on a daily, one day, 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 and a 4 hour, 4 hour, 4 hour, 4 hour, and so on. So each time frame that you're on, it tells you what the time frame is, right? So up here, I leave my time frame like this. You click this, and you go right here, and you put the star beside the ones that you want to have up here. So I have the 15 seconds. I have the 1 minute, 2 minute, 3 minute, 5, 10, 15, 30. Also have the 1 hour, the 4 hour, the 1 day, week. Sometime I depends on what is it that I'm doing. Like I will go out for like 6 months or 12 months, but because I'm not really using that right now, so that's the reason why. Sometimes I do like 3 months when I'm like really doing like back testing and stuff like that. But once you start getting used to it, you're gonna see exactly what is it that I'm talking about. And what else? So now we're in a bigger time frame. For you guys, I would just say keep on the 5 minute time frame. Reason being, it gives you a lot more to work with. 3 minute also give you a lot more to work with. Once you start getting down here, you see everything start changing. Sometimes I'll be on that 15 second. This one right here, if you don't know what you're doing, it's going to take you out and it's going to, put you in a position that you don't want to be in. So let's keep that in mind. So the main thing that you guys want to look at, you look at the daily, the 4 hour, 30 minute, and then going on to the 5 minute to look for entry. Why I say that? Because these bigger time frame, which is a daily, 4 hour, and the 30 minute, they're showing you where the market is going, especially on the daily is telling you the market is going down. The 4 hour is telling you the market is going down also because it created levels right here to remember the step that I was talking about, like this is the step that I'm talking about that's going down. So with this one, it won't be tradable as yet because if you look at this side over here, you got 1, 2, 3. Market came here before, respected, went down, went back up, come back, and then break through it, and then now it's making its way. So if I see something like this, what I would do, I would wait for the market to actually pull back up in here, or just see if the market is going to break this location right here because it rejected this location before it started going up to the upside. So because it's like literally sitting right here, I want to trade this. Some people would have put in the trade because everybody sees something different. They would have put the trade in based off of this area right here, right? Reason why I said based off this area right here because market was at this area 3 different times before and then rejected right here again, went down and then went up. Once you get down to the lower time frame, you're going to start see exactly what is it that I'm talking about. As you can see, these are the area that the market was at before that I was showing you on the 4 hour, which is 1, 2, 3, 4, 5. And then it broke through it and went up, rejected up here, and then started making its way back down. So now market is back into this area again. If you go down to the 1 minute, you can see that you see earlier entry. I would not touch it. Some people would touch it, but I would not touch it until it get back up here, bounce off of this area, and go back down. And then I'll look for I would look for a position right there. But for right now, I want to touch this because it's created this whole head and shoulder right here, and I would have just wait and see if it's gonna break back this area back up to the upside, and if it do break it, then I'm gonna go ahead and I will put a sell in on the way down because the 4 hour is showing me that the market is doing a pullback, and if I go on the daily is showing me that the market is bearish. So that right there, I would just wait, especially like with this right here. I would wait and see if it will break through this area. Because if you could see this area right here that was looking at the 4 hour, we still have another area right here. So everything that you do on the chart, everything that you do on your right, you're gonna look to your left. Right? Look to your left. See what your left is doing at all times. So based off of whatever your left is doing, that's how you're gonna determine of what going on to your right. All right, boom. So go ahead and delete that. Um, what I wanted to show you. So what we were talking about earlier when I said, so today is what? Today is Tuesday. So I'm looking for Monday. Too far. So I'm looking for Monday 1800. 1800. So this is today's Tuesday. Whatever. I'm looking for the 1800. Tuesday, Monday 02. There we go. So this is Monday. Market opens, and then market opened at 1800. So they close at 17, and then they open back at 1800, right? Then we try to find 330, which is right here. So now what I do, I take a line like this, I place it right here, and I change that color, give it a red. I'm gonna clone this, and then I go up. So in between these two lines right here, this is an Asian session, right? So now my time that I wake up, I normally jump on a chart around 7, 8 o'clock. So for 8 o'clock, for 8 o'clock or before 9:30. Oh, so this is between um, New York and London. So now what I'm gonna do is I'm gonna take another line. This is the London low. I'm gonna change this to green. And this is the London high. I want this to be on 8 o'clock. I'm going 8 o'clock. 8 o'clock. Let me note this down. Okay. So that one is from yesterday, and I'm gonna do today, 8 a.m. 0330 and 18 1800. 1800. Okay. Take these off. Let's go ahead and let's keep it for a day. I don't want to So when I'm doing the back testing, all right, boom. So that's the lower low for the day for Asian, and I'm gonna do that red, and then I'm gonna do a higher high for Asian, and I'm gonna do that, do that red also. So then we have London session right here, right? And I'm gonna change that to green, and then we have higher high. All right. So when I was saying to you earlier, when I said I try my best to trade without indicators, because I try to look for stuff like this, especially when I see stuff like this on the chart. I get overly excited because like this right here is what I'm looking for. As long as I have London higher high and London lower low inside of Asian higher high and stuff like that, or if it's on the other side out and out, as long as I have them on the inside, it's perfect for me because when the market start moving up this way, I know for a fact that it's gonna come back down, and that's exactly what I was looking at earlier. So so for the London session earlier, that one went up. I did the first trade for that because we had news around um, so we had news around 8:30. Market went up, came back down, and then 9:30 when the market opens up, it went back up to this area and started making its way down, and then it broke through. So like I said, what I said earlier when I was like, a lot of people will see this. A lot of people will see this, right? And they said, okay, you know what? I'm not going to touch it. I'm just going to wait for it to break out of it and then go back up and do a trade. But for me, I know exactly what is it that I'm looking for. I want the market, especially on the 9:30 open, I want it to either come here or come here. So because it come up to this side right here, I said, okay, boom, it's on this side, so I know that the market about to go down because it went up in respect to higher high for London and Asian, and then it went in between it, and then it started making its way back down to the downside. So that's how I was able to collect what is it that I wanted to collect out of the market today. So when I said I'm trying to do trades without an indicator, I'm definitely trying to stay far from using the indicators. And now I'm down to the 1 minute, right? So earlier when this market started moving up like this, it created a thing called a fair value gap. So a fair value gap is this big candle right here that just run right up, nothing in between it, nothing in between it, and then you have a wick right here, and then it keep going up. So now, when we see stuff like this, we're gonna say to ourselves like, okay, that's what we're looking for because now this is about to come down and close the gap. So this gap right here, if you look at the rest of the market, you're gonna see that every one of these long candles, they have something that closed them. So this one right here, this had to come back down and close it. Came down, respected, went up a little bit. Market opens at 9:30. So that 9:30 push always gonna happen. This again gave me confirmation that the market is trying to go down because guess what? The market opened at 9:30. It pushed up one way and then it pushed down. It does that all the time. Like every day it does the same thing. And then this right here, this fair value gap earlier from when the market pushed up for that news that came out, this right here automatically gave me my confirmation like, okay, so we push back up into this previous gap, so we're gonna go ahead and close it. But guess what though? 9:30, we have the 9:30 gap right here. So we call it a 9:30 gap because this is the first gap that happens after the 9:30 market open, which is the market opens at 9:30, it pushed down, right? So we know, okay, boom, we have this gap right here that need to be filled. We don't know when it's going to be filled, but the mere fact that it went up and filled the gap and went back up into this area, that's another indication the market is trying to sell, because keep rejecting off of this area right here, because this was a higher high for London and England. I mean, for London and Asia, this was a higher high for this location right here. So until it break through here to clear this out, then it will be a it will be a buy. But remember, we had already look at the daily time frame and tell ourselves like, okay, the market is very strong going down. So guess what? We're gonna stay in that, we're going to stay with the market, stay with the trend. Don't never try to fight against it and think that you know more than how the market know itself, because it's going to play you all the time. So this is why I came up with these trades this morning, because of that. So like I said, trying to shy away from indicators, and we're just gonna just work on that. But from here, just you guys just go ahead and create the trading view account. Go to trading panel, click on paper trade, create it, go from there, and then practice while you guys are doing that thing. Any question that you guys have, like, don't even be afraid to reach out to me and let me know that you guys have questions and stuff like that, because I'll definitely answer those questions for you. So in the event that you guys get up at, like, say 7 o'clock in the morning, right? I know you got to be at work for for 9, and you want to say you want to catch something. So 7 o'clock, you see a move like this, you're not gonna trade anything. What you're gonna do is you're gonna look to see if you see what kind of news they got coming out that day, see how the market moves, and then you go from there. But I'm gonna break down how the news situation work. But what I want you guys to do first is create that trading view account and start practicing on it. And I'm gonna do a separate video to let you guys know how that trading that the trading calendar for the week, how is it set up and how it works. All right. So I'm gonna go ahead and send this over. Let me know if you guys have any questions, and we could just go ahead and I could just go ahead and answer those questions for you. I'm here. It's like, you guys can call me anytime. I don't mind. I'm here. All right.